Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just want to go over the pump in the market and kind of give you an explanation of why that could be happening. Of course, if you take a look at the longer Bitcoin chart, what we do see is something pretty obvious is that there's very, very rarely a case of 4 weeks or more that are red on the Bitcoin chart. In other words, these charts don't just go down, they go up and down. It's obvious that's what markets do. And, if we're going to have, a period of 4 weeks down in a row, then it should be followed by some type of pump, and that should just be expected. It really should be just that obvious. I do believe that there was one time that there was five, red candles in a row on the weekly, and maybe that was back in, 2013. But as you can see, just statistically speaking, it was almost impossible that the week after that this week was going to be red. Just highly, highly unlikely. And so taking a bullish outlook on the weekly would have been a perfectly reasonable position, even if you're still a little bit bearish or have concerns with the market in the long run. And so I just want to affirm both the bulls and the bears in this case because I think sometimes, either moon boys or doom boys kind of like phrase these things as if they're enemies, but of course markets move up and down. They don't just stand still. And so we need both. We need both in order to keep the market healthy. And that's also, of course, the principle of coming back to our EMAs. In order to have healthy pumps, we also need to have healthy checkbacks on our EMAs. And so when bears are talking about they want to check back to the 200, that's just healthy. You guys are on the same side because then the bulls take over and they pump it up to heaven, right? And so you guys both make money. Don't make fun of bears, don't make fun of bulls, try to work together. And basically, our job here is to try to outsmart the market makers who are trying to outsmart you at every turn. Now, one thing that we do see about this pattern of four red candles in a row on Bitcoin is that they come in pairs, which is kind of interesting. Now, we only have two cases for this, so that's not even a trend, right? But we do have the potential to kind of form a trend in the future. And one thing that I was just noticing is that, of course, it follows the overall trajectory of the market. These things don't necessarily break the market structure, at least in these two instances. And so I'm just hypothesizing that our next 4 weeks red in a row might be somewhere out here. These do appear to be getting a little bit closer. Again, this isn't a trend. This is just coincidence, right? So, just a one-time occurrence is nothing. 2 times is a coincidence, and 3 times maybe is a trend, right? Maybe is the beginning of a trend. So we can maybe just hypothesize that if we do have another 4 weeks red in a row, it might be after either a dump or after a pump. And then maybe it's going to be a fake out that precedes a massive pump. You see here, that was a fake out that preceded a massive pump. And here it was a fake out that preceded a massive pump. So sometimes, you may hear somebody talk about these 4 red weeks in a row preceding a massive pump, and they may be saying, okay, well, we're going to the moon now because we've had 4 red weeks in a row. But no, I mean, the reason I'm taking time to like explain this is because of the people who say that sort of thing. No, it seems like they work in pairs. And so it's the second one that is the fake out to the go. And if this does prove to be some kind of trend, then we might expect 4 red weeks in a row, around our current price action, maybe a little bit higher, maybe, you know, not too much higher, but similar price action, price level. And then you might want to be in your positions if you haven't been in your position yet, because that track record, at least in these two cases, is pretty good. However, what I would just want to make very clear is that the first one is just 50-50. Here it preceded a pump, and here it actually preceded a pretty decent sized pump. I mean, it was nothing to sneeze at. But the thing is, it also preceded a dump. And that dump, may have already been written into, the pricing, but maybe it was just accelerated by COVID. So we don't know. Like, we don't know. In other words, don't take this one for granted that it's going to precede a pump. It could just precede some shenanigans. Like, we don't know. You also see this massive fake out wick right here. And that fake out wick like just pumped Bitcoin and then brought it all the way back down. So there could be some shenanigans related to this first four red candles in a row, if it even has any significance at all, which that is not proven. It's just one of those kind of thinking out of the box things that I like to do on this channel, because otherwise you're going to be just hearing the same boring stuff on every single channel. So I'm trying to provide something different. Okay, but I think we can move on from that one because that was just something that was just, for fun. What I really wanted to do is give you a little bit more evidence of why I call Bitcoin, just a tech meme stock. So to do that, let's go ahead and put a picture of the stock market up here. In this case, it's the NAS 100. And let's just go ahead and turn off my support and resistances there because that's not the most important thing right now. But let's go ahead and overlay an image of Bitcoin onto it. Now, at first, you might think, this has nothing to do with each other. It looks nothing alike. But let's go ahead and turn log off and then go down to the daily. And then let's kind of stretch out these charts. I think I can move this one around. And maybe even let's go to the 4 hour and just look at what's been going on, in the last, few days, the last couple of weeks there. So here we go. This can kind of give you a pretty good idea. Now, you do see that I have to stretch it out quite a bit in order to get the proportions to line up. And that's simply because there's massive price differences between Bitcoin and like the Nasdaq or the S&P. And then also there's a tremendous difference in the market cap in terms of how much money is in the market. And so the way that they get exaggerated is totally distorted if you were just to post it on top of each other like I originally did, where they didn't look anything alike. But when you play with just a localized area, you can see that these things trade almost identically, almost identically. And so, I hate to say it, but we've gotten to an era where those billionaires and the market makers in the stock market and in the traditional finance sectors, all these things, they've taken over Bitcoin. They've taken it over. They've hijacked it. Okay. So you can no longer claim that Bitcoin is this independent thing from the stock market. It's just not true. Otherwise, this thing would be moving significantly differently. And it's not. It's moving almost in perfect lockstep with the stock market. So Bitcoin is trading as a tech meme stock, and that's also why I chose the Nas 100. Just it has a good tracking record. We can also look at like SPY, the S&P 500, and you can see it's also very similar, right? Very similar. But, you know, I just believe that the NAS 100 fits a little bit better when we take a look into the details. So with that out of the way, I would like to talk a little bit about what's going on in stocks, because I've just proven to you that Bitcoin follows stocks. It doesn't follow your favorite gurus. Do you know why I'm saying this? Because there are a whole bunch of people out there who are trying to be crypto gurus, and they're trying to tell you to take this call or take that call, and they're saying, "Oh, my calls are so amazing." No, they're not. No, they're not. Bitcoin is literally just following the stock market. Okay, it's exaggerated, but it's just following the stock market. You no longer need crypto gurus, okay? And that's not what I'm trying to be. I'm not trying to be some crypto guru. I don't want to give calls. I just want to like analyze these things, out of the box and kind of like think with you. As for calls, like literally just go, listen to some screwballs, talking about the stock market to figure out the direction of Bitcoin, because it is a tech meme stock, nothing else. And maybe, they're going to diverge, once again in the future, stocks and Bitcoin. But right now, the professional exchanges, whoever like is playing in the professional exchanges, they've got a stranglehold over Bitcoin, and that's not going to change probably for a while. Sorry to break the news. So what do we see in stocks? So this is the S&P 500. What we had is a Wyckoff upthrust. I started to look into these type of different Wyckoff patterns thanks to a friend named Alex about a year ago. And I have to admit, like I always thought like those things were pretty funny, like these Wyckoff patterns and stuff. I thought it was kind of conspiratorial. And but in fact, these patterns actually do play out, and professional traders do use them. And the more I looked into it, the more I understood that there were, legitimate uses for those type of patterns, even though a lot of people do just try to see them everywhere and try to see pure market manipulation. A lot of it is based upon studies of just normal human behavior and normal market behavior of big players. And so it doesn't even imply manipulation necessarily. Wyckoff just implies that this is something that can be commonly seen. Now, do market makers and others, start to plan around that and, even set it up? Maybe, of course, same as we use EMAs, same as we use fibs, same as we use support and resistance and, different zones. Of course, there's always the chance to front run each other and to try to trick each other in order to capture liquidity or to gain some advantage, right? So, of course, those things happen, and in manipulated markets, which crypto definitely is, it probably happens uh, more often than you think. But this is just traditional stocks, and so what we had here was a Wyckoff upthrust. Of course, everybody thought, we're going to go to the moon. Retail kind of FOMOs back in, and then they get slammed down hard. And the reason why I've marked out my chart the way that I have is because you can see, like, we got out of this zone that I have marked here that we needed to hold as support in order to be bullish. And we broke all the way down here to this support. If we lose this support, if we get rejected here and lose this support, then I could see us coming down to these areas, briefly. And if we aren't able to just grab support down here, then we'll probably be falling all the way down to this last kind of distribution pattern. around here in the 350s. So that's going to be a huge fall. And, again, like if the stocks fall, like Bitcoin falls a multiple of that. So this is, almost 15% approximately on stocks. And what could we see on Bitcoin? We could see a really huge number. And since this did prove to be a Wyckoff upthrust, it didn't end up being a bullish reversal. That suggests that there is more downside. And based upon that, I've marked out these levels. Let me go ahead and bring us to the weekly, and you'll see why I set these levels. As you know, I primarily use EMAs. And here you can see I just brought up, kind of this logical place here based upon the 200 EMA, which the S&P seems to routinely use as support, rarely breaking down below it, occasionally, which could be a little bit scary in our current situation. All right, just like this, breaking below it. And so if we did break below it, that would imply all the way down to 300. And that would be something, close to like a 30% drop over time, which could be fairly horrific for the crypto market. Let's just put it that way. And there's no real way around this. Eventually, we need to check these levels. You can see we always come back to check these levels. We always come back. And if you look at the average amount of time that we spend, moving around in these different areas, you know, this obviously was accelerated because there was the COVID dump. But you can see we've spent, you know, and I'm going to use diagonals the same as horizontals because time and distance is the same on charts, just like X and Y axis. So we've traveled approximately this distance, the same thing that we did, just a little bit more horizontal this way. And so it does look like we're in an area where we could have one of those major pullbacks. This is something that you want to take seriously into consideration because these kind of like Wyckoff patterns and other type of, fake outs, basically, we can just call it a fake out. These type of fake outs are designed to get your money into the market so that they can bring it down to the next level. Now, how do you decide that we've overcome this? How do you decide that we've, turned bullish? Well, right now you can see that we are actually at resistance. And so if we get rejected here, that's not going to be a good sign for crypto. It probably Bitcoin would start turning around. And we have at least one, two levels that we need to overtake before we can have any concept of bullishness. So we would have to get to approximately 440 on this chart. Different stock charts have different pricing because they have different purposes. This is like the ETF trust, right? There's also like futures and other stuff, but I'm just using this one demonstratively. And so we have to get approximately in this area. So we have to go 1, 2, and then we actually have to overcome this area, not just the middle of it, but we have to overcome the top of it, right? So we have 1, 2, 3, 4 huge layers of resistance that we would have to pop up above. And it is possible. It's just, this chart looks like it wants to kind of squeeze down a little bit to me. At least checking out these levels, just in my opinion, I could be wrong. Like we could have a massive run and then we could do a double top or something and check back later. Right? There's nothing wrong. There's nothing wrong with, potentially doing something like this and then coming back down here later during some catastrophe or something. It's just, do you have a premise of the world? Do you have a theory of the world economy right now that allows for that? I don't see one. So I'm going to be slightly biased to the bearish side, but I will have these levels marked out in case we're not headed down here, in case we do get over these levels and we end up being in a bull run, in which case I will be bullish. Same thing for the NAS 100. You know, I don't need to explain all this because it's essentially the same thing. It's essentially the same thing. And these are just levels that I have in my mind. Other analysts may have other levels in mind. I'm not an expert on stocks behavior or anything like that. I'm just a continuous learner trying to share what I'm learning. And if you guys have other ideas or if I got something wrong, please put it into the comments. But I do see us just kind of using these EMAs as support right now on this diagonal support from back here. Same as we were kind of having support and we had a little bit of a bounce back here on these EMAs. But overall, like this looks like a downturn to me. It looks like it wants to continue to turn down. And, you know, there's a little bit of hope that there could be, you know, some type of mythological bottom being put in right here. But overall, you know, my expectation is that we might tag lower and maybe even down here, if not catastrophically down here. And so I will be paying attention to these golden targets. You know, which one are we moving towards? And right now, although we are technically bouncing, there's nothing bullish about this bounce. There's nothing bullish about this bounce. This bounce looks exactly like this, which which continued a downturn. It looks like this candle, which continued a downturn. So don't necessarily be faked out. If you've made some profits today, just always take your profits. Just always take your profits. Maybe we do continue to pump. Maybe we break these levels and keep going. But at least you took some profit along the way. And then if we break into a new level, you can take your profit at the top of the next level, you know? Like you don't have you can buy back in. You don't have to just get out of the market, but trade level to level and you should be able to protect your wallet. That's just you know, my philosophy. Guys who just, you know, they see a crash like this and then they just hodl and then they find out that they're in a market right here or down here, then they're going to wish that they didn't hodl. They're going to wish that they traded level to level. All right. And then if we ever do crash down there, they're going to be perfectly happy to buy because then they're going to make a lot of money on these levels coming back up. Right. Or down here, you know. So that's what I'm just trying to help you guys understand. Let's see if we can actually take a look at Bitcoin. Let's see, how can I turn that off? Mhm. Yep. So let's see. We had a top of a market right here, and Bitcoin fell approximately 50%. Okay, 50%. And then let's go ahead and take a look at stocks again. From the top over here, stocks have fallen 23%. Okay, so what does that tell you? That at least for the NAS 100, that Bitcoin's fall can be, you know, at least twice as big as whatever the NAS 100 falls. Why do you think I'm spending so much time on these stocks and showing the risk that are involved in stocks right now? Because you want to understand your risk for Bitcoin. And since Bitcoin doesn't trade on its own, there's nothing bullish or bearish about Bitcoin. It's just a tech meme stock. It trades with the stock market. You have to understand what's going on in the stock market. You have to understand what's going on in macroeconomics. You have to understand what's going on in the Federal Reserve. Who cares about what's going on in Bitcoin? Bitcoin will not do anything on its own. Bitcoin is a puppet on strings, and there are puppet masters now controlling Bitcoin. It wasn't always the case. It is the case now. And if you don't believe that, if you think that's some kind of conspiracy theory, just remember and look back in some of my other videos. I'm not a conspiracy theorist. I laugh at conspiracy theorists. I enjoy conspiracy theories for entertainment, but I am definitely not a conspiracy theorist. And Bitcoin absolutely is a puppet on the strings of puppet masters trying to get your liquidity. That asset is designed at this time. It wasn't designed for that purpose, but it is used at this time solely to extract liquidity from you and via altcoins that track Bitcoin. Okay, so Bitcoin tracks the stock markets. Those market makers pull the strings on Bitcoin, and Bitcoin, pulls the strings on the altcoins, and that's how it goes. So let's see if we do have a fall of, well, let's just say 7% to 14%, moderately. We could see another, let's just say 20% fall in Bitcoin. And if the market does end up, just reaching these kind of extremes, 37%, right? I mean, let's just be a little bit more moderate about that. Just call it 35. Then you could see Bitcoin fall another 70%. Do I think that this is going to happen? Not likely. Let's see what SPY is doing, the S&P. Let's see, S&P fell again like 14%, right? And what did Bitcoin fall? 50%, right? So S&P, right, was 14%, but Bitcoin was 50%. So you have to understand, like, there's a huge multiple with the S&P, at least with the SPY, and that multiple would be 3.5, right, approximately. So let's just double check that I measured that right, because that could be, yeah, I mean 3.5. Because this is the scarier one, because the S&P does break these 200 EMAs, right? Like, it breaks it quite regularly. So so if the S&P has another 14% that it could fall, let's just be conservative and take the take the 200 here, right? So if it has another 14% to fall, then that means Bitcoin could fall another 50%. And if it falls down here, which would correspond to these like huge wicks that it sometimes gets, below the 200, then that would be 26. And so again, it would imply another 75% off of Bitcoin. You guys understand why I'm going through this process, right? I'm not trying to like scare you or anything, but like we really need to hold this area on stocks, and stocks are incredibly important. And you know what? Your favorite crypto gurus, the guys who are trying to give you all the calls on crypto. I mean, yeah, they might be good traders. I'm not trying to diminish the legitimate traders. That's a different story. I'm just saying the gurus, right? Like the gurus, right? These crazy guys who just have like are full of, shenanigans and antics on crypto Twitter and on YouTube, and they just like it's just another universe, right? Like their minds are so weird, right? They don't deal with reality. They're just like kind of weirdos. Those crypto gurus trying to like brainwash you into their space, they're unnecessary. They're unnecessary. All you need to understand is what's going on in the stock market. You just need real traders and to understand what's going on in the stock market and to overlay your charts with Bitcoin the way that I did. And then, you can do research on coins that you're interested in terms of altcoins. It's not too hard what we're talking about. It's just you got to be careful because, again, the system is designed to take your liquidity, and the guys who are taking your liquidity are the ones who are paying those gurus, okay, to manipulate you, essentially. Yeah, so we had a warning here that Bitcoin could fall as much as another 70% down. Do I think that's going to happen? No. So it was 50% to 75%, right? That was the range. Where would that bring us? Let's just say 50%. Yikes. That would be $18,000. Definitely going to have a buy order there. And let's see, what would 75? Let's measure that from our current price because, yeah, it just seems like too crazy. 75% would be 10,000. Hey guys, what have I been saying? 20,000 to $10,000 is possible. I've never done this before. I've never made this type of measurement using the stocks before. And just look at where that aligns with. 10,000 and $18,000. That's based upon stock predictions, stock market predictions. It's not based upon crypto predictions. It's based upon stock market predictions. It may be a little bit hard to hear, but this is the technically probable region that we could drop to if the stock market has a major correction. And I don't even need to think about crypto. I don't even need to think about crypto. If the stock market has the correction that a lot of people think it's going to be having, then we're going to see Bitcoin in this area. I can almost guarantee you. I'm not making any promises, any warranties, any guarantees. I'm not giving financial advice. You can do whatever you want. I don't care. It's just psychologically, I'm going to be prepared for this area in case there is a stock market crash. We don't even have to call it a crash. We can just say a bear market, a stock bear market, right? Extended stocks bear market, a massive correction that happens every decade or so. And that's going to be the best buying opportunity of your life, right? At least going forward. If you can buy here, you're going to be set in the world of crypto. Now, it could take a while for that market to heal. You have no idea how many years it could take for that market to heal. It could be a V-shaped recovery. It could be a 2-year crypto winter. You have no idea. But you're going to be glad that you bought in these areas. If you buy high quality projects, not just stupid stuff that's going to die. And then let's say that the stock market only has a moderate pullback. Then we're going to be talking really about this like 28K probably minimum. And to put a range on that, I would even include like just 30K to 28K in there. Because we already know that if we're going to like check back some levels and it's just going to be that kind of a correction in the stock market, probably we're just going to hit these levels. But if the stock market crashes, get your buy orders around 20K and let's say 12K to kind of front run the market. Those multiples might not play out, right? You could even say 25K and 15K if you wanted to, just like be really conservative on an extreme, because that is an extreme case. Again, this is not a prediction. This is just math. It's not a prediction. This is just math based upon what's possible, not what I'm predicting. I have absolutely zero predictions right now because we're very borderline. We could just go sideways, have weird random pumps, and do that. We don't even have to come back down here. The EMAs can catch up with us. You see? The EMAs can catch up with us. Like, we don't necessarily have to come down, to tag these EMAs or do something crazy. But if the world turns crazy, then you're going to want to be prepared. And how can I say that? That's so low below the 200 EMAs. Well, look at this. I mean, it happens, right? It happens. And if stocks do it and Bitcoin's controlled by stocks, then it can happen. And if that helped you out, guys, leave a like, leave a comment, whatever. If this helps you think about things, just let me know, and I'll try to, get more concepts like this out there. But again, I'm trying to think outside of the box. All your favorite crypto gurus are going to be trying to make you think that they're geniuses and that they're making all these calls. You don't need them. You don't need them. They're completely worthless. You just need to understand the stock market right now. Sad, but true. And I kind of do hope that there is a bear market just to shake out all the weirdos. We have 18,000 like KUCOINs. We have probably more than 18,000 weirdos on crypto Twitter. And I would honestly hope for a bear market just to shake out all those guys. And also to get the guys that are legitimate, just to help them professionalize, because I think you have to professionalize in a bear market. Of course, when the market's just going up forever, you can just be a weirdo as much as you want. You can scam people and whatever, but if markets are going down and not much is happening, like, you have to really offer something of value. And I hope I'm, starting to offer something of value. This channel is pretty new. I hope I'm offering something of value to you guys who are listening, and that you are at least able to capture something new or a new perspective or a way of thinking outside of the box that maybe you didn't hear somewhere else. Because most of this, I would say the majority of what I present is just out of my own imagination, and I don't write it up in advance. I literally just spit it out while recording. The amount of time that my video takes is, to watch is the exact amount of time that it took me to plan and make it. Okay, I'm just coming out here every single day, just spitting out knowledge that I've accumulated. And by verbalizing it, it helps me also learn it and ingrain it inside of myself as a continuous learner. And that's why I'm doing what I do. It's not for ego. And if I ever get trapped into that, just call me out on it. It doesn't matter. Won't hurt my feelings. I'll probably just say, "Oh, you're right," I'll try to do better, right? So we're gonna just watch these prices and see how Bitcoin behaves, and watch the stocks and see what's going on stocks. There's multiple earnings coming out this week, multiple earnings reports, and those are going to influence the way that the stock market, decides if we're bullish or if we're bearish. I wrote it somewhere. Let me see if I can find it. Just made a kind of a summary of the important ones. And yep, here we go. Just a second. So we basically have earnings reports for Google, Microsoft, Visa, and GM tomorrow, Tuesday, and then Facebook, PayPal, Qualcomm on Wednesday, and Amazon, Apple, and Twitter on Thursday. And I just selected those. There's actually, I think, like hundreds of earning reports coming out. I just selected this basket to kind of follow because if any of these ones are particularly strong, right? If Google just had a really strong earnings report, or Microsoft, or Apple, or Twitter, or Visa, or Amazon, these tech stocks, right? Kind of tech related stocks, then it could provide a huge boost of confidence in the market. Even if a couple others are weak, if there's a really strong one, it could provide some confidence in the market. And that could potentially have us, take out some of these levels that I've been talking about. That could help us get over these hurdles and just break through to the next step, right? To the next step. I think that the news about Elon and Twitter probably helped us in the crypto market, and it's just something that it's an interesting story that kind of makes you think about the potential for Twitter and things like that. And so, and obviously we're at support, in stocks right now. Like we fall to different support lines, and so we're at support right now. And so we could see this pump today, but that pump can go away very fast tomorrow. It can go away very fast tomorrow. And right now, we're still just at resistance. And this thing, kind of like this, you can have a blue candle that kind of turns around and turns red pretty quickly, by tomorrow. So again, take a little bit of profit and pay attention to those earning reports. Pay attention to these earning reports and see if you can let's see, can I change the font size on this? Yep. And if any of them look particularly bullish, then maybe you consider to get back into your position. But if they're really bad, then no matter what the moon boys, whatever the moon boy gurus on crypto Twitter, on crypto YouTube are saying, don't listen to them. Follow the stock market. Okay, guys? Follow the stock market. Uh, One other thing, I did get into a trade today. It was just kind of a follow-up to one that I had been talking about previously. This was a huge zone, but I actually bought back into this D travel down here at support when it wicked down and it started to bounce back up. And I did get a nice, 10% off of that trade. But again, like I just consider to get in and out of these trades. I don't consider these markets stable. I'm not recommending this coin. It's just something that I analyzed. I sometimes analyze coins and I find these interesting places to buy in. I mark it out, and then, you know, I buy on the signal that I've created myself from patterns here. And I had a very similar one lining up here, and so I did buy in and, sniped kind of a 10 to 12% move, which now is kind of rejecting as the stock market is hitting resistance. And you can do that. You can do that and make some money, but I recommend taking your profit because you never know when it's going to turn around. Let's see, there were a couple winners. Oh wow, B Pro went for it. What was this? Wow, 47%. Holy mackerel. Strong B Pro. Strong B Pro. Yeah, let's see what happens there. Wow, that was just an incredible move by B Pro. But let's see. Audio. It's okay. A lot of these coins, like KDA, Kadena, they just look like they're just kind of reestablishing their support. They don't really seem that bullish, to be honest. They just look like they wanted to prevent themselves from falling, from falling deeper. If they do fall deeper, I'll try to catch those ones, but I don't really like coins that don't look bullish. Prefer to be into something that's bullish. Like Credo just doesn't look bullish to me. Could easily continue down. If it does, I'll buy lower, but I don't like this setup right now. Maybe if it just continues up, I'll check it out. Might pull something like this, but just I don't like its behavior. Man, I wish I had grabbed some of this B Pro at support. My friends and I talk about this coin a lot, and it's good for trades. I wouldn't necessarily sit in it, but that was a nice move. It was a nice move. I believe Rose performed well. Zilica doesn't look great. Oh, Epic. Okay. Not a great chart, but nice move. KNC has just been crazy. This thing's been going like Luna. Let me check out Rose. Oh, Rose. Looking nice. I mean, at some point it was up 25% today. Yeah, that would have been a nice pullback to get into. Dang, I saw that pullback too. I should have grabbed it. But hey, so there are some things pumping. There are some signs of life in this market. This isn't the worst chart in the world, right? It's just kind of a sloppy chart. Others are pumping, but they have really bad charts. Obviously, Doge is pumping on the news of Elon Musk buying Twitter. And so people are kind of putting in bets that he'll allow Doge as kind of a payment method. 39%. Nice. Nice. I wish I had bought that. I didn't even think about buying Doge on that Elon Musk news, but it's kind of the coin you should go to whenever you hear good Elon Musk news. This ape coin is going crazy. Strong brand though, the Bored Apes, very strong brand. All right, guys. Again, look forward to these earning reports and pay attention to the stock markets. Don't pay attention to crypto gurus. They're just going to manipulate you. Like, to be honest, most people in this space have some type of personality disorder and mental health issues, and that's not to make light of it. It's just a fact. It's just a fact. This industry attracts a lot of independent people who have their own kind of quirky way of thinking, including myself. And sometimes it can get a little bit overwhelming, like being in that pure space. Kind of step back a little bit and take a look perhaps into the professional assessments of stocks to try to see if there's anything that you can learn that way, as opposed to just listening to a bunch of kids on crypto Twitter try to pretend that there's some type of trading gods or something. They're not. They're not. It's literally just the stock market. Okay, just every coin is just literally an exaggeration of the stock market, or perhaps its own branding. And like coins like ApeCoin, that's something where you should really understand the project. It's a new coin. It's just came out, and so there's room for the gurus also. Just don't get brainwashed by it. Don't be a moon boy. Don't be a doom boy. Just like I took a trade today. Don't be afraid to take a trade. Just you can FUD yourself out of the market if you're not careful. You can FUD yourself out of the market. Even if the overall market is in a downtrend, there are opportunities. The market does not just go down, it goes up and down. And so there's lots of trading opportunities. You can make money in a down market. You just have to always be aware of your risk, always be aware of where you're going to get out of the market if it turns bad. That's all, right? You don't revenge trade and you don't stay in a trade just because you're in a loss. Sometimes you can just accept the loss and put your money into something that is going to work out or has a higher likelihood of working out next time. At least this is how I'm thinking. And so that's your alpha for the day. Stay safe and happy trading.